Welcome to the daily stock review of Ionis Pharmaceuticals. The goal of this channel is to uncover the world's best stocks that have 100x potential. We'll be doing that by reviewing 1,000 stocks in 12 months. That's 3 a day. If that sounds good, you can subscribe to come along for the journey. So who am I? I'm an individual investor on the journey, just 2,500 hours in over the last 7 years, and I'm sharing the lessons along the way. Here's my investing process. Today I'll give you a rundown on how I came across this stock and the 5-minute check to see if it's worth looking into further. I learned from these guys. They've done pretty well for themselves over just a little while, and by following the breadcrumbs they've left behind, we should be able to follow in their footsteps and achieve some of that success. If you'd like the tools, resources, everything I wish I had when I first started out for free, that's in a link in the description, so feel free to check those out. Otherwise, let's get into it. So Ionis Pharmaceuticals has dropped in price around 35% over the last pretty much month. And if we look across the last pretty much 5-year period, it's been fairly consistent, traveling sideways around that $35, $40 a share. Significant price increase, and then it's dropped off the face of the planet and come back down. So let's go and have a look and see if this business is worth looking into further. At this stage, it's showing me it doesn't have a price to earnings ratio, so that usually comes up when the earnings, which is our net income in this instance, is below zero. So it's made a loss for the most recent year, but it's been market cap. The whole business itself is being priced at $8.6 billion with all the shares outstanding at that value. So how did I come across this stock? I was looking around and looking at insider buys. So that's people within this business that have bought its stock. They have to do public disclosures for that information. You can find that online. And so I saw that one of the directors, Michael Hayden, has purchased a little over $1 million worth of shares on the 31st of July, which puts it pretty much smack bang here when the price has decreased. So he's jumped on the opportunity. He's got the inside streak on understanding what's going on inside the business, and it's not insider trading because he's not sharing that information externally with select sources. All the information that we've got here is public knowledge, and the fact that we know he's buying is an indicator that he believes it's undervalued and will increase in value over time. So I'm going to have a look at the latest annual report. So that's got all the information in it we should need. I want to have a look at the statement or the income statement. It's also known as a statement of operations. So first of all, we've got revenue, top line of the business. We've got product sales, royalty revenue, other commercial revenue, and then total commercial revenue. And then we've got research and development revenue, collaborative, Awanua joint development, total research and development revenue. So they've broken these up into a fair few different streams. So in the most recent year, 2025, they do have product sales. That comes down. You can see it's been fairly consistent, and there's a little bit of growth here. That main growth being from this new revenue stream within the business. Now, businesses, when they're split up like this, having lots of different streams, it can be very difficult to focus the business on where it needs to grow. And what are the areas that it needs to just pretty much focus its attention to get the next unlock from. So there's actually been a decrease in this joint development revenue. I haven't gone through, and at this stage don't need to go through and understand the entirety of their business model. We can have a look at the financials, which is, as Warren Buffett said, It's the language of business. So our expenses, let's just see what we end up with. So we can see that it's running at a loss pretty consistently. In terms of the net income is a loss. Cost of sales, research and development, patent, and then selling, general, and admin. And so research and development, patents is very consistent. Selling, general, and admin has increased a bit, and it's wiped out that profit. Now, even with a business like this, it's a matter of how long do I think it's going to be running at a loss until it turns the corner. And looking in here, what do I think was the turning point for the stock price going up and pretty much doubling and then coming back down to reality most recently? And so at this stage, what I've got is these product sales. It might have been a bit of talk about a new revenue stream coming in. And we'd have to go digging for that, have a look at the news, and then correlate it back to around the time frame that this increase in price happened, because it's all based on pretty much behavior and the psychology around it. People perceive the value of this company increasing that much. And then most recently, they perceived it was worth a lot less. So let's have a look at the balance sheet. Don't tell me it was going to be back up above where we were. Yep. So our assets, 3 billion to 3.5, compared to our liabilities of 2.4 to 3. So there's not a huge difference there between them. Usually like a large difference between them. Total assets, short-term investments, so 2.9 versus 7 or 800 million, which is a better position. Let's see what else we got. The debt within the business, convertible notes due 2026. So they got half a billion due to pay this year. What else have they got? They got some other notes and things like that, which is just debt. Due at different times, so 2026, 2028, and 2030. And so pretty much as long as this business, it depends if this business is going to be able to, because they're running at a loss, there's a risk that this business won't be able to acquire the funds from, most likely from more public places like banks and things like that and other institutions, to say, hey, we've got another $500 million in debt that we'd like to use, we've got $500 million that we'd like to get a loan for. The bank gives them $500 million, and then what they do is they just pay for their notes outstanding. Or in this instance, if it's in the public markets and they've given out corporate bonds, then they're saying, hey, bondholders, can we get these? Can you guys buy our bonds? And they'll be priced at the market relative to the risk of the business. So they might have a higher percentage to pay because the market's not willing to take them. And that just means more money outflow at the end of the day. So there is a bit of risk there, just within, if this business continues to operate at a loss, investor sentiment changes, and people aren't willing to lend it money, there's an issue there. All right, let's go and have a look at the cash flow statement. So I'm not too impressed. Just it hasn't mastered its customer yet. It's not making any money. It is increasing, but it's early on. There's new revenue streams coming in and this and that, but they're not significant enough. Has it got a moat around the business? Well, it hasn't been shown in the financials. We would expect to see some strong margins coming through. And we want to see if management's being rational with how it's spending its money. So we start off with this net loss from our income statement, get some adjustments done to it. We've got a stock-based compensation expense, which is sitting there. That's just money allocated to the future to pay for any stock-based compensation that their management team and other people within the business have been provided with the options for if they hit certain targets. So what do we end up with? Net cash used in operating activities. So they're, as we'd expect, they're not making any cash from the business and they're ploughing it back into all these other ventures. Investing activities, so purchase of short-term investments, proceeds from them, so that's just maintaining the cash in the business. They buy and they sell a little bit throughout the year. Purchase of property, plant and equipment, so there's been a fair bit of growth from 23, what are we talking, million? It's in thousands, so yeah, thousands to 23 million, 45 million and 51 million. And acquisition of licenses and other assets. So if the business is investing in things, it would be in here and in our research and development, which has already been, I guess, put into that net loss figure, and if there's any other adjustments that come out. Now, financing of the business. So it's run at a loss. It's run at a loss again. So we're talking $500 million just there again for the last 2 years, pretty much, where it's got to fill the gap. So how is it doing that? So proceeds from common stock through equity plans. Proceeds from issuances of public offering. So it got in the previous year, in 2024, it got $500 million from the public markets in terms of shareholders. And then what's it done here in the most recent year? It's got proceeds from issuance of 0% convertible senior notes. So due 2030. So it's gone and asked and written up some corporate bonds. 0% convertible senior notes. So there must be some special circumstances around these. Why you would want, with being an interesting setup, let's just say that. So $770 million. So instead of asking for more money from shareholders and diluting existing shareholders, they've asked for money from the public debt market. And then what have they done? They've used part of that money to repay some of the previous debt. All right. Well, that's all very interesting. How do they end up at the end of the day? Yeah, they're just maintaining a cash position. So it's not like they're growing. They don't have cash coming into the business at this stage. It's getting consumed. They're not really investing in any, significant amount in terms of purchase property, plant, and equipment. So the business at this stage is just relying on hope that they'll be able to come up with certain patents, intellectual property that is, be able to monetize it and produce it at a suitable price that they'll make a tidy profit, and then be able to run that up and produce enough money that this business is worth what it currently is. So this stage, business that uses cash is worth less than nothing. The reason why it's worth more than that is because people believe it will grow in the future. So will it? Well, it just depends. At this stage, it's humming along. It's not going to go bankrupt tomorrow, so to speak, with how it's been running, but it's also not the best business in the world, and it's not hitting my requirements for doing that. So I'm going to pass on this business. If you've got any other comments or any thoughts, feel free to drop them below. I'll review them in upcoming videos. And otherwise, thanks for your time, and check out this next video because YouTube thinks you'll like it. Cheers.